Right, we'll start with trade management first because this explains the situation. We believe I'm looking today at the daily chart, the current daily chart. The current daily chart relates to what we get to see on this weekly time frame. So this is again the current weekly time frame. We would like to look at the triggers. So the triggers here are showing a top out in the double head that occurred between uh, probably July of 2021. You get a double head here, you get a neckline, and the market, of course, had very strong, robust momentum, and then began to break lower above that level 3. Today, we are at that same level 3, and we are, of course, attempting to do head levels. We have double heads here. We should expect double heads at some point, and the double heads will probably be moving inside of either a leading diagonal or an ascending triangle with a leading diagonal. But we believe there is a trigger at that point where you had a bounce out of these very high overbought levels is occurring. So this bounce out of these very high overbought levels occur at the lower neckline, this neckline. Today we're getting a bounce out of the higher overbought levels at the higher neckline. This is the higher neckline. How do you know we get a bounce at that level? Because of this formation. We're having a flag formation. We're having an asymmetric triangle. We'll establish this, that this is really an asymmetric triangle when we go to the shorter frames, when we go to the 4 hours and the 45 minutes. We have segregated this into an asymmetric triangle. It's still undergoing segregation to be frank, but we believe it is correct. So the labels here, of course, show 1, 2A, 2B, and 2C. This is today's daily chart. And then turn on 1 and the 2 lower here, turn a 3 and a 4. At that point, we had the 1 and the 2, 3, 4. I believe this should be, of course, the 5. It is just misplaced, not 5 dots back here. We get to do a 4A, we get to do 4B, we get to do 4C. Maybe we get to do A and B and C into 4C. And then we'll break out higher into 5 in green. 5 in green can actually truncate with level 3 in green. Also, that level 3 here in green, I mean 5 in green can truncate with, and just do maybe 76, maybe 80, 71 before the market breaks lower. But the focus is that we expect the breakout of the upside of this asymmetric triangle, and therefore we want to buy the lower boundaries of that asymmetric triangle. If we have longs, then I believe we have at least half-size longs going into the end of the week, and we hedge them using 0.75% shorts, also going into the end of the week on Friday. We stress this very forcefully. So we should have shorts and we should have longs at the same time. We're going to close out the shorts now, all right, and hold the longs because we're going to be attacking the upper boundary of that asymmetric triangle. Again, based on this figure of this formation on the weekly frame. In order to break below, of course, you need to see degree 3 negative momentum at 4 hours. Meaning if you believe this asymmetric triangle, we're just going to be doing a head and then we'll break lower to level 4, for instance, before we break higher to do another higher head. It's possible. We have to see negative degree 3 momentum in the 4 hours. We're not, of course, seeing this at this point. And therefore, or at least it has now terminated. And we'll check it, but I believe it has terminated, so I believe the coming leg is higher. Okay, so it's still the same trend. We are going to be doing buying into the market all the way to $72. The market only saw 71,500 and then crashed. We are still long, of course, and therefore we'll still hold to $72. We hedged the longs. We're going to be closing the longs today. Closing the shorts, I'm sorry, today, holding the longs again to $72, $72,000 and maybe 71,500. This is still a cycle 3 plus 4. The whole correction that we have been seeing, actually, I guess it did occur on the weekend. It had something to do with risk aversion because of what has been going on between Israel and Iran. So it's out of context, and the market should still be fundamentally strong. We shed light on the fact that the wave 4 on this 4-hour chart, when we were seeing the flat, in order to see a good reversal, in order to see the real market reversal. We had a strong retraction, of course, across the end of the week. But in order to see strong reversal, you are looking at a zigzag formation. The zigzag formation, the first leg is very strong. We had a strong leg to the downside last week, but there was no continuation. There's a bounce now. And therefore, we still believe we're going to 73,000 again, at least to terminate. We will have a zigzag, probably 76,000, right, before we finally do a higher degree way forward. Let's take it now to actual trading. So this is the delayed 4 hours that we were looking at last week. We're just keeping it to show the labels, because the labels, of course, are important for the advance. So over here they show a 1 and a 2, it's 3. We've been doing a 4A, 4B, and a 4C. This needs to be amended because it is very lengthy. It means we've had a 5 here. Alright, so it's like we had a 1 and a 2, we have a 3 and a 4 at that point, and a 5. But even if we have a 5, it's still an A and a B and a C. And the maximum retraction has been 62,000, about 61.8% into the channel. It gets, I believe, to show more strongly on this focus point. Okay, so we've had an A, we've had a B, market bounced at 62,200 to be exact. When we go to the next chart, we have, of course, extended the lower boundary of that. This is no longer an ascending triangle, it has become an asymmetric triangle. The bounce should be valid, right? And we expect to take it to attack the upper boundary of the asymmetric triangle at 71,500. Shows now the internals of that asymmetric triangle. This is today's. We are doing very extended shoulder levels. It doesn't mean that we're going to get ahead right away, but it means that we are going to be doing 71,700, maybe spike 72,000. So here we have a 5 into 3. Of course, we had a high degree A. We had an ending diagonal into a B. The B drops a bit back. Then we had an A, B, C into an A. We had a 5 strong structure into a B. We had an A, B, and a C into a C. Segregation of this move will be shown on the next chart. We expect to have a bounce. The market really bounced 62,000, and that 62,000, just to remind ourselves, was the bottom of the whole motive swing. We will check it, of course, on a live market. All right, so let's take it now to actual trading. So we left off, we want to segregate this kind of correction to the downside to terminate with C. Shows you in more detail. There's a 1 and a 2, 3, 4. There's been 5 at that point. We had an A. I believe it gets more updates. There's a 1 and a 2, 3 at that point, 4 and 5. High degree A, high degree B. This is the important move. It has a 1 and a 2, internal 1 and a 2, 3, 4, and a 5. High degree A, high degree B. It had a 1 and a 2, 3, 4. We believe this is 5. We'll check it right now. It will go live, but we've had a 1 and a 2 and breakout higher. There was no positive momentum at this point. And this is, of course, are the boundaries of the symmetric triangle shown in green. We have to update this when we go to the 15-minute charts, yes. But I believe instead of an ascending triangle, we are now looking at an ending diagonal retraction into this. If we are not long, we can long. If we are already long, of course, we'll close out our shorts. We are presumably hedged at around 64,000 to around current levels. 50% of this kind of ascending or this current ending diagonal all belongs to target 71,500. I would think we have longs around 69,000 and maybe some of us at 68,000 levels, 500s and so on. Let's check momentum picture first. So we have, of course, some positive momentum now on the 30 minutes. We've had a cycle extreme here at minus 487. Let's take this to 45, and we have contained momentum in the 45, and no cycle extreme really. take it to 1 hour. Becoming contained now under the cycle stream of minus 329. Take it to 4 hours. We have negative momentum. We may still have continuation. We would consider this, but the loss trigger that we have at level A is really recurring into level C. That's all. And therefore, yes, we can attack the lower boundary of this asymmetric triangle, but I believe we ultimately resolve to the upside. The daily remains positive, just below the both levels. And of course, the asymmetric triangle formation shown here more strongly, or dependent. Let's take it now to trade management. We have had some positive. We had a cyclic stream, of course, to mark termination of the correction at minus 760. We had positive momentum now on the 15 minutes and on the, not really on the 5. We used to have positive momentum on the 5, but now we have negative momentum on the 5. All right, we believe we're doing the 1 and the 2 becomes, I believe, very clear. We believe correction is finished at that 5. I was saying this earlier, the 1 and the 2, 3, 4, and a 5. As of that point, we simply segregate the negative momentum. So we had an internal 1 and a 2. As of that point, by the 1 and a 2, 3, 4, and a 5. So we've had a 3. We're getting a 4. I believe we still have another leg into 5. More like this before we finish level 1. But when it takes still more time, what's in another get another 5? Really gonna take more time. So for simplicity, I can use these labels. So the new sanctions on export of Russian minerals or metal. Depending on how you want to label it, it's 1 and a 2, and then you can have a 3 at that point because you've had an internal 1, 2, 3, 4, and a 5. The traction bounces out of level 1. But we don't have positive momentum, but we have a cyclic stream too here, so probably it's a go long at that point. But again, there is still no confirmations. At least we don't want to get burned at these levels because we're already holding longs. All right, so if we are already long, we are going to close our shorts, our hedges. I hope we have them and we are able to implement correctly. It is possible, of course, to use half of the profit created by the shorts. We were hedged at 67,000, so we're now at 64,700. We should have made a bit of money. It's possible to use half of the profits made on the shorts to liquidate the fraction of the longs and redo an entry long at lower levels, all right, using, of course, suppose, for instance, I was 1 coin long or half a coin long, I would have liquidated 0.1 of a coin long. I can add 0.2 of a coin long and then become 0.6 of a coin long, it would of course decrease my my longs average and allow me to get more profits at 71,500, assuming we will get there. Okay, so this is what we're seeing. We just need to finish the current correction. It's at 50%, 61.38.2%. If we wish to add, we can add if we have the potential, the capacity. If we cannot add, we'll just hold our longs. If we really have the hedges, I hope we do, because we should have them. We stress the necessity for them across the end of the week. Then we just close out the hedges, take out the profits. Once we get reversal, I believe we are long and we are good. The labels here show, of course, an internal 1 and 2, 3, 4, and 5 show an A, B, and a C. If we bounce, we really bounce. Of course, if we close the hedges and take in the money, you want to be secure again, so you must have hedges below level C. For suppose I'm half coin long, I'm going to have again 0.75 of a coin hedged at support 2, meaning shorts equal to 0.75% of my, if I have a half coin, again 0.75 of a coin short 60,900 or 61,000 at support 2. If I'm already long, I hold. If I'm not long in the first place, once I break level 1, once I break this point, internal level 1, so this is like an A and a B, and then a 1 and a 2, and a 3, 4, and a 5. And once I break level 1, I can long. I will be seeing then positive momentum, at least on the 5 minutes, good positive momentum on the 5 minutes, and by the time I get to the neckline, I am seeing good positive momentum on the 15 minutes. Okay, so what is the neckline? The neckline is, of course, this level. When I get to this level, I should be seeing positive momentum in the 15 minutes. But once I break that level, this level 3 here, or level 1, sorry, I am seeing positive momentum in the 5 minutes on this 5 minute chart, and I can long at that point. All right, let's move on then. So I believe we'll be doing dollar yen. This is the last trending issue today. All remaining issues are very swing trades, and we'll be doing them tomorrow. So we are going to be doing dollar yen. This is trending to the upside. US Tech 100 is a swing trade. We'll be looking at that tomorrow, and also sterling yen is a swing trade. We'll be looking at that tomorrow. So let's move to dollar yen. This is the last issue that we'll be doing today. So if you have any questions or issues that you wish reviewed or revised, please notify the moderator so we could look at them before we put it an end to our analysis today.